G'day YouTube, Max right here, and a crypto nuclear bomb is going off right now. This could probably be the most disastrous thing that's happened to crypto since the Mt. Gox exchange collapse way back in, I think it was 2013 if my memory serves, if not it was 2014. So the big deal here going on. So the Terra Luna landscape, Terra, Luna, Terra is the project, Luna is the coin. That project, its main product, is a stable coin called UST. It's an algorithmic stable coin. It is supposed to stay pegged to the US dollar. And you can see here on the chart, this is a daily chart. Each one of these candles is a day. Yep. And this was just a glitch on the exchange. This never actually really happened. But this thing was just supposed to stay right at a dollar. Just a dollar, and the peg has broken. We went all the way down to 60 cents on the dollar. It's fought its way back to 83 cents on the dollar, and it's going to be very interesting to see if this will recover or if this will shoot confidence in this coin, in this stable coin, and its days are numbered. I'll get into a big explanation of what it is, what the stable coins were doing, how the peg broke, all this kind of thing. I'm going to do a big thing here, but first I want to explain to you the magnitude of what's going on here, the significance of it. If you like this kind of content, hit the like button, hit the subscribe button. This is really seriously breaking news. So if you want to understand the significance of this, both of these coins, both the UST, the stable coin, and Luna were both top 10 coins as of yesterday, I believe. So Terra is now down here. It's still a top 10 coin. Sorry, that's a UST is a top 10 coin, and Luna is the 12th ranked coin. Okay, now you can see the value of Luna has dropped 50% in the last 7 days. I beg your pardon. The last 7 days, it has collapsed 50%. Terra, it's down. UST, it is down 18%, but climbing back. So between these two, I mean, at its height, Luna, its market cap was 24 billion. And this guy over here, the UST, its market cap was close to $18 billion, a little bit over. Okay, so between these two, we're just talking about tens of billions of dollars. That if confidence is lost and this collapses, we're talking about $40 billion worth of stuff in the last 7 days evaporated. 30 plus billion of that all in the last 24 hours just evaporated. Two top 10 coins being collapsing right here on the same day, and they are obviously interlinked. So okay, now you've got an understanding of the gravity of this. Now let me go through and help you understand exactly what the hell is going on. What are these projects? What are they doing? What's the significance of it? And in case you didn't know, I'll get to this. In order to get to it, I've got to get to the very end. But just so you know, this project is the third largest Bitcoin holder. So there's Satoshi Nakamoto, there's Michael Saylor, and then there's these guys. These guys hold more Bitcoin than Elon Musk. They are the biggest holder of Bitcoin, third biggest holder of Bitcoin in the universe, and we don't really count Satoshi Nakamoto himself because those coins have been dormant for 13 years. So really, after Michael Saylor, they're the second. If this project explodes, does this mean that the third largest holder, the second largest holder of Bitcoin is going to liquidate all of their Bitcoin? We will find out possibly in the next hours, days. I mean, this is huge, monumental stuff. So let's go and fill in some blanks here so you understand what the heck is going on. Okay, stable coins. For those of you who don't know what a stable coin is, it is a coin, it's a cryptocurrency, but its job is to just stay pegged to something. In this case, it's the US dollar. Just be worth a dollar. Don't go up, don't go down, just be worth a dollar. Bitcoins, Ethereums, polka dots, all these things, they're volatile. They go up and down. You can make money on them. This thing is designed to be dead boring. It is just supposed to stay at a dollar. And it serves an enormously important function in the crypto universe. All right. So crypto enthusiasts, we're trying to build bigger, better, and more stable, less risky alternatives than the legacy systems, right? So we would love to just go to a Bitcoin standard and we can just get into the world of all these algorithmic coins and algorithmic DeFi, and we'll never have to step foot in a bank again. That's what the goal is. That's what everyone's moving towards. But there's a problem with this. Most people aren't ready to bite the bullet and deal with Bitcoin in this growth phase when it's volatile. So as a stepping stone, as a way to get into this, there have been the creation of something called stable coins. These are boring ass coins that are just supposed to be on, say, the price of $1. How are they helpful for us? Lots and lots of different applications for this. If you're a trader and you think the price of coins is going down, you want to be able to sell your volatile Bitcoin. But sell it for what? Cash? So what do? Now you have to use a centralized exchange. You got to go back into the legacy system, and there's all this paper dollars, and you got to use exchanges, fine exchanges, Kraken, Coinbase, Binance. Nothing wrong with these exchanges, but they're real world legacy things. They can go bankrupt. Staff members can steal the coins, just like happened to Mt. Cox. They can go belly up. It's real world, it's old time, and it's riddled with problems. Hence, we want stable coins on the crypto universe so we can stay in DeFi. We can go in and out of coins, in and out of dollars, in and out of stable gold coins, in and out of stable silver coins, in and out of stable euros, and we never have to touch the legacy system. That's the goal, it's the end goal. It's what pretty much everyone in crypto is working towards. There's a huge need for it. So traders was one example. Another example, you've got places in El Salvador that are adopting the Bitcoin standard. In the meantime, there are people who are very poor and have very tight margins, and they need to know their dollars are going to be there. They can't handle Bitcoin going up, going down, going sideways. They can't handle that. It just means they can't pay next month's bills. So they would like to stay in the crypto world but have a stable coin. Okay, so there are two examples. There's a million different examples of why one would want a stable coin. Even though you know that if it's linked to the dollar, you know in the long term it's going to go down in price because, of course, the dollar goes down in value. That's what inflation is. Okay, that's a high-level thing on stablecoins. Let me zoom in one level deeper. There are two main types of stablecoins. There are stablecoins that are backed by real-world assets. So this would be something like USDC, and Tether. That would be USDT. And these are things where you send them your money, they stick your money in a bank account, and they issue a token. And then the token goes on the block exchange. But there's a real-world bank account with real-world dollars, hopefully, or some other real-world assets, real estate, bonds, whatever, that is backing up your dollars. There's real-world assets backing up the tokens on the exchange. Okay, this is obviously undesirable. This doesn't get us to our end goal, which is we never have to touch the legacy system. No more Jamie Dimons. No more people can steal from us. No more Fed can confiscate things. We don't want that world. It's too subject to the whims of man. All right. So there are some flaws in that system, but in the absence of anything better, those coins have done very well and exist, and they're thriving. And you can see right here, you've got Binance USD. I believe that is a physical world backed. But way up here, we've got USDC and Tether, the number 3 and number 5 coins, just sitting there holding. They've got real world bank accounts, real world things backing up these things. Okay. Category number 2 of stablecoins. This is something like Tether, and it is called an algorithmic stablecoin. And it does not have any real-world assets. It doesn't have anything outside of the crypto sphere. It is completely self-contained in the crypto sphere, and that is what we want. That is indeed the end goal. So what they did was they came up with a concept that these two coins, they were going to have two coins, Terra Luna, and it's going to be a very volatile coin. It goes up in value, it goes down in value. It's all over the place. And it's kind of got the governance token. And it's kind of like, if you bought that coin, you're investing in the company, and the company's product was this coin right here, UST. Their product was a stable coin, right? And so the mechanism, it gets a little bit more complicated than this, but the mechanism is, for people, there are actors out there, and they've set up some incentives for them to do this. They can create UST, but in order to do that, they have to burn Luna. Said another way, you have to buy Luna, raises the price of Luna, right? You could then have that Luna has some value, then burn it to create UST. You can now sell that UST to people who just want a stable coin, right? So there's several different actors in this marketplace. And just like Satoshi set up this beautiful union between miners and users and investors and all of these things, the union comes together perfectly so that everyone can act accordingly to their profit motive, and you can bank on that. Now, there's no advantage to being sneaky, bad, whatever. The people at Terra have tried to come up with a similar system. There's arbitrages. So if the peg gets out, they're incentivized to buy it and bring it back into place. There's a whole bunch of actors designed to keep this peg. And as more and more people flooded into Terra UST, then the value of Luna went up because more people are using their product. There's a fee mechanism, a whole bunch of things going on. The value of Luna kept on going up. So over the last Luna and UST have exploded in prominence and have become top 10 coins. Okay, a little bit more details here coming in. Let's zoom in a little bit further. Why did it explode so well? Well, the other coins, like these ones up here, there's two primary problems with them. So this is Tether and USDC. One, they're built on the Ethereum network, right? The problem is that gas fees are horrible, super high, because Ethereum is trying to service 50,000 different projects, NFTs, DeFi, you name it. The Ethereum is trying to be the daddy of them all. It got so bloated, the fees on the network went just skyrocketing, and now it can cost you $50 to send $2 worth of a stable coin. Not very useful. Second problem, it interacts with the real world. They have physical world backing. There's real dollars, real whatever there. So those two big problems were why people started leaving Tether and USDC coin and heading towards Terra UST. Terra UST, it was a purpose-built chain to exclusively do this process, right? And so it is faster and it is significantly cheaper. The fees are much less than the Ethereum network, and as a result, this coin exploded in value, exploded in popularity, and a lot of people started using it. Okay, next thing I want to share with you. It grew up so big and so fast, and these kind of algorithm coins, but this is not the first algorithmic coin to collapse. There have been several others, because they can work for a while, but at some point, if people lose faith in it, it's a run on the bank. If people are like, oh, I don't trust this project, I'm going to sell my UST and I'm going to sell my Luna, and both start plummeting at a very quick rate of knots, you end up with a point where all of a sudden, very visibly on the blockchain, you can see that this project is insolvent. If everyone tries to get their money back at the same time, this is not going to work. And there's effectively a run on the bank. And that's kind of what happened here. Now, in anticipation of this, as little as I think it was a month or two ago, the CEO, so I'm not sure if that's the exact right word, but anyway, Do Kwon, I think is his name, the leader of the Terra project, he said, we understand that Luna might go up and down, be a little bit too volatile. So we're going to buy Bitcoin and use Bitcoin to back some of the UST. So they bought up, I believe, somewhere between, I think it was between $5 and $10 billion worth of Bitcoin over the last month. And so they've got these huge Bitcoin reserves. They have these huge Terra Luna reserves underpinning the UST. Now, I don't know why, but as of a few days ago, well, actually, I think I got a fair idea. As of a few days ago, the UST peg started looking shaky. It was been at like 99.9 cents on the dollar, or 1.01 cents on the dollar for months and months and months and months. All of a sudden, it was like 99.5, and it was just lingered around there. And they started defending the peg, which means they're buying and selling dollars, and they're buying and selling things, and they're doing whatever to defend the peg. Earlier today, that peg broke big time, and you can see my head's in the way. But maybe if I go this way, this chart right here is it. And in fact, I'll show you on this chart so you can see it on the full screen. You can see there's big, giant red candles. So you can see there's a few days where it doesn't look so great. And then there's this huge drop down here. And then on this daily candle, it went all the way down to just about 62 cents, right? So at this point, there's just a run on the bank. People are trying to get out of here. I've got $50,000 worth of UST. It's a stable coin. I don't want to be exposed to cryptocurrency. It's plummeting in value. I'll take what I can get. I'll take 60 cents on the dollar. And that's what people did here. Since then, it has bounced back up to 75 cents. I don't know what the mechanisms are that are defending this, that have brought it back. Like I said, it's a little bit more complicated system. There's mechanisms designed where there are arbitrages. The further this gets out of whack, the more money an arbitrager can make. But they might also be scared that they end up getting caught holding the bag. And so maybe the arbitrager stepped back and said, peace out, I'm out. Maybe one has stepped in. I don't know. So that's what's going on right now. So this, for me, this it was always a risky project to start with for a couple of reasons. We've had several algorithmic coins before trying to achieve this, and it hasn't worked. Eventually, this happens. There's a big drop in the market, and things are dropping simultaneously. People are scared that it's not going to be unbacked, and that's just what happens, right? There's another thing. Another reason that this project was so successful, I think I mentioned it. Venture capitalists came in and were subsidizing the interest rate in this world. So you can just buy the stablecoin, stick it on the, just have it there, stake it on Anchor, and earn 20% interest per annum. It's 20% per annum, but it's paid daily. And so it's a phenomenal interest rate. Compared to leaving money in the real world, stick it in your Chase bank account, stick it in your Wells Fargo account, you're going to get somewhere between 1/4%, 0.5%, 1%. You're getting nothing. It's right massively under inflation at 8-9%. You can just stick your dollars in here and start earning 20%. And venture capitalists were funding this. They were bleeding money through their pockets, trying to get people into UST so that it would get to this massive point and it would be the market leader. It's a very common technique. I mean, Netflix, for example, a company with billions and billions of dollars on the stock market, it's never made a penny in its life. This is venture capitalists, pardon me, creating shows, spending money building shows, subsidizing a product because they just want all the customers, right? This is very, very common in the venture capital world. So that was what was happening there. And so what was happening was, I think, if you look under the hood, in the next month or two, the venture capitalists were going to run out of money. And so maybe a huge reason why people have their money in there is they're earning 20% interest. A huge reason why people have their money in there, perhaps, is that people were thinking that as the venture capitalists run out of money and then the interest rate was going to go back down to something like 4, 5, 6%, then people were going to sell their Tether, sell their UST, sell their Luna, and walk away from all of this. So that is possibly the main catalyst for what happened here and why it happened. But it's just to have two top 10 coins go down in a single day in the cryptocurrency space with just massive valuations on both, nearly $50 billion worth of value could be eviscerated here very, very soon. I mean, it could happen in hours, could happen in days, or it might not happen at all. They may somehow figure out a way to defend the peg and regain the market's confidence in its peg. And they could buy themselves, maybe the project will work long term and this coin will be around forever. Personally, I don't see that happening. I think from this, it's going to be very, very, very